You know, it feels like the world's financial system is stepping into a new era, a more volatile and, let's be honest, a more dangerous one. The old playbooks are being tossed out, and Europe's central bank is making some big moves that tell us it's bracing for impact. So let's get into what's really going on here. Now, this isn't some throwaway line in an interview. This is a direct warning from Christine Lagarde, the head of the European Central Bank. And where did she say it? At the Munich Security Conference. That's a huge deal. It was the first time an ECB chief has ever spoken there. It's a flashing sign that economic policy and global security, they're now one and the same.
So what's really driving this? What are these massive threats that are forcing one of the most powerful financial institutions on the planet to completely rethink its strategy? That's the big question we're going to unpack.
Okay, so the first thing to get our heads around is that we're operating in a totally new global landscape. The ECB isn't just making these moves in a bubble. Oh no. This is a direct response to some really powerful forces that are reshaping our world.
For decades, the thinking was that the more connected our economies were, the safer we'd all be. Well, that idea has been turned on its head. Now, that same interdependence looks like a major vulnerability. We're in an era of what they call geoeconomic fragmentation. It means supply chains can be turned into weapons, trade can be shut down in an instant, and all of that creates this massive cloud of uncertainty.
So, in response to all this chaos, the ECB has done two, on the surface, very different things. First, they set up a massive new emergency fund to stop financial panics in their tracks. And second, they've actually started fining banks for not taking climate change risks seriously enough. Now, these might seem unrelated, but they're not. They are two sides of the very same coin, building up defenses for a world where shocks, whether from geopolitics or from the environment, can threaten the entire system.
All right, so what exactly is this liquidity backstop? Think of it as a giant safety net for the global financial system. During a crisis, you can get what are called fire sales, where everyone panics and starts dumping assets for cheap, which can cause a market crash. This new 50 billion euro fund lets other central banks borrow euros to stop that from happening. It's basically a shield against those sudden geopolitical shocks.
And that brings us to the second piece of the puzzle, the environmental threat. For years, we've heard the ECB talk a lot about climate risk. But talk is cheap. What we're seeing now is a huge shift from gentle suggestions to, well, hard enforcement. The ECB has officially grown its green teeth. And this timeline just lays it all out perfectly. Look at this progression. It kicked off in 2020 with just a guide, basically suggestions. Fast forward to 2022, and they're running massive stress tests. By 2023, those suggestions became legally binding rules. And now the fines have started. This was never a sudden decision. It was a deliberate, methodical plan that's now reaching its final stage.
And here's the proof. Look, that number might not seem like a lot for a giant bank, but don't let it fool you. The message it sends is huge. It's a shot across the bow. It's the ECB saying, we're done warning you. This so-called symbolic fine tells the entire financial industry that the era of just talking about climate risk is officially over. The threat of penalties is now very, very real.
But wait, why is a central bank getting so involved in this? It's a great question, and the answer is simple. This isn't about saving the planet, it's about saving the financial system. To really get what they're doing, you have to see climate change through their eyes, not as an environmental problem, but as a direct threat to stability.
And it all comes down to this one critical term, systemic risk. Right? This is the nightmare scenario for any central banker. It's the domino effect, the fear that one bank's failure could cascade through the whole system and trigger a total economic meltdown. And the ECB has basically decided that climate change is a massive and frankly poorly understood source of that exact kind of risk.
And they break this risk down into two main types, which is pretty interesting. On one side, you have transition risk. That's the financial fallout from, well, transitioning to a green economy. Think new carbon taxes, regulations, that sort of thing. But then you have physical risk, and that's the straight-up damage from floods, wildfires, storms, you name it. Both of these can absolutely hammer a bank's balance sheet.
So it's one thing to say these risks exist, it's another thing entirely to put a number on them. And the ECB didn't just take a wild guess. They launched one of the most massive studies ever to try and actually quantify the future cost of climate change.
I mean, the scale of this is just mind-boggling. They didn't just look at a handful of banks. They dug into the data for 4 million companies and 1,600 banking groups. They modeled different climate scenarios 30 years into the future. This was a truly monumental effort to turn an abstract threat into cold, hard numbers.
And this right here is the big takeaway from all that work. This is the punchline. Yes, transitioning to a greener economy has costs, you can see that on the left, but look at the bar on the right. Those costs are absolutely dwarfed by the economic damage of what they call a hothouse world, basically the future where we fail to act. The conclusion couldn't be clearer. Doing nothing is, by a huge margin, the most expensive option.
And this quote from their final report just nails it. The danger isn't spread out evenly. It's concentrated. It's in specific industries, think fossil fuels, and in specific geographic areas that are vulnerable to extreme weather. Any bank that's overexposed to those areas is essentially sitting on a ticking time bomb. Just another source of that volatility Christine Lagarde was warning us about.
So, it's obvious the ECB is going full speed ahead on this. But here's where the story gets even more fascinating. This aggressive approach is not happening everywhere. In fact, if we look across the ocean to the United States, we see a completely different playbook being written. I mean, you really can't get a sharper contrast than this. On one side, you have the ECB doubling down, making climate risk a core part of everything it does. On the other, the U.S. Federal Reserve is actually pulling back. The Fed seems to be held back by politics, and it's causing this major split from what's becoming a global standard. And this isn't just an academic debate. It creates real uncertainty in the markets, when the world's two biggest financial players are heading in opposite directions.
Which, of course, leaves us with the billion-dollar question. As our world gets more chaotic, as climate shocks and geopolitical tensions keep rising, which of these models is going to hold up better? The ECB's proactive, enforcement-first approach, or the Fed's more cautious, politically sensitive path? The answer to that is going to define financial stability for all of us for years to come.
The choices these central banks make today will absolutely shape our economic reality tomorrow. To keep up with how this all plays out, be sure to follow TrendPulse.